Assalamualaikum and happy day today. I am Husna Dua Nabi Tiruskan, metric number T2023-1107-117. Today, I will be presenting about two companies, which is Eon versus Lotus. Our group consists of 5 members, which is me, Putri Nabila, Zati Nabila, Siti Nur Amira, and also Nurul Alia Nadira. Without further ado, I will start presenting the brief overview of the companies. Lotus is one of the international operating of Tesco PLC, a global retailer of groceries and a general merchandise with Lotus in the United Kingdom. Lotus Malaysia is formerly known as Tesco in Malaysia. After the acquisition, Lotus now operates a total of 64 stores in Peninsular Malaysia. Moving on to Eon. Eon is actually a multinational retail and financial services corporation based in Japan. It also operates various businesses, including general merchandise stores, supermarkets, and financial services. Eon is known for its diverse range of products and services, contributing to its widespread presence in Asia.
So, we will proceed to the next part that will be presented by me. My name is Nurul Alia Nadira binti Amigi. My metric number is D202311070776. So, we will take a look at the financial performance for Aeon. The first one is firm liquidity. The current ratio is not improving from 2021 to 2022 and the ratio is 0.51 to 0.50. Acid test ratio decreased from 2021 to 2022 and the ratio is 0.174 to 0.172. Account receivable roll up by this company is increased it's from 20.96 times to 32.41 times. Days in inventory will be sold is maintained, which is 100.89 days. Inventory sold and replaced in this company is increased, which is 3.62 times to 4 times. Next, we will move to Aeon operating profitability. Operating return on assets increased from 2021 to 2022 and the ratio is 4.45% to 5.95%. Operating profit margin in this company increased, which is 9.51% to 10.65%. Total asset turnover is increased from 2021 to 2022 and the ratio is 0.47 times to 0.56 times. Account receivable roll up by this company is increased it's from 20.96 times to 32.41 times. Inventory sold and replaced in this company is increased, which is 3.62 times to 4 times. Fixed asset turnover increase, which is 0.88 times to 1.03 times. Next, Aeon financing decisions. Debt ratio in this company decreased from 2021 to 2022, which is 70.27% to 66.70%. Time interest earned is increased, which is 2.01 times to 2.82 times. The last one for Aeon is return on equity. Return on equity in this company increased from 2021 to 2022 and the ratio is 4.89% to 6.16%. We will move to the financial performance for Lotus. The first one is firm liquidity. The current ratio not improving from 2021 to 2022 and the ratio is 11.23 to 9.61. Acid test ratio decreased from 2021 to 2022 and the ratio is 10.45 and 9.26. Company decreased the days in receivable from 2021 to 2022, which is 149.79 days to 101.27 days. Account receivable rolled over by this company is decreased. It's from 2.44 times to 3.60 times. Days in inventory will be sold is improving from 2021 to 2022, which is 34.57 days to 8.73 days. Inventory sold and replaced in this company is increased, which is 10.56 times to 41.82 times. Next, Lotus operating profitability. Operating return on asset increased from 2021 to 2022 and the ratio is 3.80% to 7.54%. Operating profit margin in this company decreased, which is 4.78% to 4.65%. Total asset turnover is increased from 2021 to 2022 and the ratio is 0.79 times to 1.62 times. account receivable rolled up by this company is increased. It's from 2.44 times to 3.60 times. Inventory sold and replaced in this company is increased, which is 10.56 times to 41.82 times. Fixed asset turnover increase, which is 2.38 times to 1.39 times. Next, Lotus financing decisions. Debt ratio in this company decreased from 2021 to 2022, which is 15.94% to 13.89%. Time interest earned is increased, which is 14.56 times to 23.2 times. The last one for Lotus is return on equity. Return on equity in this company increased from 2021 to 2022, and the ratio is 3.64% to 4.01%. Next, we will analyze the calculated ratio and the significance for the two companies, which is Lotus and Aeon. The first one is firm liquidity. We analyze that Lotus are better than Aeon in current ratio and acid test ratio. For the days in receivable and account receivable turnover, we can see that Lotus is slower than Aeon in collecting accounts receivable. It also same for days in inventory and inventory turnover, which is Lotus carries and move inventory faster than Aeon. Next, operating profitability. Lotus earns significantly higher return on its assets relative to Aeon, but in operating profit margin, Aeon are better in managing cost of goods sold and operating expenses. In total asset turnover, Lotus generates sales higher than Aeon, but Lotus are slower than Aeon in collecting account receivable. For inventory turnover, Lotus move inventory faster than Aeon, same as fixed asset turnover, which is Lotus invested in fixed asset higher than Aeon. Next, financing decisions. From debt ratio, we know that Lotus has a more conservative approach to debt compared Aeon. Also, Lotus has higher time interest earned than Aeon. Last one is return equity. Aeon has higher return compared to Lotus.
Next, we will proceed to the trend analysis that will be presented by me. Hi, my name is Siti Nur Amira binti Azman. My metric number is D2023-1107093. As you can see here, there are two graphs of trend analysis, the Lotus one and the Aeon. For the Lotus, from 2021 to 2023, net profit has increased 14.82% by each year, and sale also increased 27.66%. And the Aeon one pula, net profit increased 30.42% by each year, and sale also increased 10.54%. Next, we move on to the graph. From all the ratio that we have count, we choose 4 ratio, which is current ratio, operating profit margin, debt ratio, and return on equity. The first graph is current ratio. As we can see here, Lotus and Aeon decreased from 2021 to 2022. And then for operating profit margin, Lotus decreased by 0.13% and Aeon increased by 1.14%. The third one is debt ratio. As we can see here, Lotus decreased by 2.05% and Aeon decreased by 3.57%. The last one is return on equity. We can see here that Lotus increased 0.37% from 2021 to 2022 and Aeon is 1.27%.
So I'm going to understand metric number D2023-107-117. It will be username by part with the company's financial strengths and weaknesses based on our ratio analysis. Liquidity ratios, strengths. Analysts can monitor changes in the firm by comparing activities from prior periods to the current ones. The corporation is often more liquid and has better coverage of existing debts when its liquidity ratio is higher. Moving on to weaknesses. When a financial crisis strikes, a number of situations could occur that make it challenging to fulfill immediate obligations like loan repayment and supplier or employee payment. Ratio strengths. It measures a firm's ability to translate sales into earnings for shareholders. Investors always look for companies with strong and consistent net profit margins. Next one, weaknesses. Businesses with low margins are usually found in industries where the majority of products are commodities or easily replicable by other businesses. High entry barriers and unique product offerings are typically associated with high profit margin industries. Next, efficiency ratios. Strengths. A high turnover compared to that of peers means that cash is collected more quickly for use in the company. Weaknesses. A very high ratio of accounts receivable turnover may also indicate that the company is missing out on sales opportunity due to an overly strict credit policy. On the other hand, a low or liquidity turnover rate may indicate that clients are having financial difficulties. The last one is solvency ratios, strengths. Provides insight on the company capital structure as well as the level of financial leverage a firm is using. Also allow investors to see whether a firm has adequate cash flows to consistently pay interest payment and other fixed charges. Next, weaknesses. The high number means the firm is using a larger amount of financial leverage, which increases its financial risk in the form of fixed interest payments. Our presenting factors that may affect current and future performance. The future of Lotus is strongly dependent on the demand of the customers. Lotus imported the goods from many countries such as the USA, China, and more. The other countries' economy has in the grip of an economic slowdown, and in order to go forward, the company's sales and revenue might take a hit as shipments from overseas are expected to decline. This is a large external risk. The company should start collaborating with local suppliers to deal with their competitor.
Hi, my name is Putri Nabila binti Zim, metric number D2023-110-7081. So how might Lotus better capitalize on non-financial factors? It can be capitalized in 4 ways, which is market share, reputation, human resources, and physical facilities. In market share, Lotus Berhad can focus on increasing its market share through strategic partnership, acquisition, or expanding its product or service offerings. By research industry trend, consumer preference, and competitors, activities to identify opportunity for growth, implementing effective marketing strategies, and improving product or service quality can contribute to market share gains. Secondly, reputation. Lotus Berhad should prioritize building and maintaining a positive reputation through ethical business practices, sustainability initiative, and transparent communication. By conducting survey, monitor social media, and gather customer feedback to assess the company and reputation, addressing issue promptly and showcasing responsible corporate behavior can enhance reputation. Thirdly is human resources. Lotus Berhad should invest in employee development, training, and well-being to ensure a skilled and motivated workforce. By analyze employee satisfaction, turnover rate, and skill gaps, utilize surveys, performance metric, and industry benchmark to identify areas for improvement. Lastly is physical facilities. Regularly assess and optimize the use of physical resources, invest on technology to improve process, and ensure sustainability practices. By efficient utilization of physical facilities contribute to operational efficiency. We got 11 examples to represent the most significant internal risk to the company financial performance. Firstly, we start with the talent attrition, followed by operational disruption. Thirdly is technological obsolescence. After that is ineffective cost management, followed by market reception and reputation. After that is inefficient internal processes. Number 7 is cybersecurity threats. Number 8 is regulatory compliance issue. Other than that is lack of innovation and supply chain vulnerabilities. Last but not least is financial mismanagement.
Assalamualaikum. So I will be presenting about recommendation under company's financial health. My name is Ati Nabila binti Azhar and my metric number is D2023-1107125. And for the first company is Lotus. Firstly, firm liquidity. Lotus have a better performance in current ratio, quick ratio, and days in inventory compared to Aeon, indicating greater liquidity. Secondly, operating profitability. Lotus have a great performance in operating return on asset, total asset turnover, and fixed asset turnover. Operating return on asset indicates high asset utilization and profitability. And the third one is return on equity. Company is generating a relatively low return on equity. A lower ROE may indicate inefficiency in utilizing shareholders' equity to generate profits. Last but not least is financing. Lotus have a good performance in asset financing compared to Aeon. The next company is Aeon. For the firm liquidity, Aeon have a better performance for days in receivable because Aeon is faster than Lotus in collecting account receivable. And the next one is operating profitability. Operating profit margin for Aeon company is more efficient in generating profits relative to its revenue. This higher margin could be attributed to effective cost management, pricing strategies, or a competitive advantage in the industry. And the last one is return on equity. Aeon demonstrates a slightly higher return on equity compared to Lotus. So the next one is recommendation regarding company's financial health. So Lotus is suitable for investment opportunity. Lotus demonstrated better liquidity and profitability than Aeon, making it an appealing investment opportunity. Lotus efficiently utilizes its assets to generate operating profits, indicating effective management. Lotus' strong liquidity, effective asset utilization, and profitability make it an attractive option for investors, suggesting a comfortable financial position to meet immediate obligations. Lotus also suitable for lending opportunity because Lotus perform well in managing its debt and financing. Only 13.89% of its asset is financed by debt. This indicates a conservative approach to financing and the company relies more on equity to fund its operation. A lower debt ratio generally reflects lower financial risk and a more conservative capital structure. Investors may find Lotus attractive for its lower reliance on debt. which can provide greater financial stability.
Next, focus future performance for Lotus. Firstly, maintaining liquidity. Lotus focus on maintaining better performance in the current ratio, quick ratio, and days in inventory, and recommend Lotus to take a proactive approach to liquidity. Secondly, improving return on equity. The company is likely to focus on improving profitability by managing costs, implementing pricing strategies, and optimizing operational efficiency. And the last one is sustained profitability. Lotus has maintained good performance in operating return on asset, total asset turnover, and fixed asset turnover, and is expected to remain profitable in the foreseeable future. We will move on to the next part, which is focus future performance for Aeon. Firstly, improving liquidity. The low asset test ratio for Aeon indicates potential liquidity challenges that may need attention. Secondly, maintaining return on equity. Company need to deliberate on controlling costs through efficient operation and continuous cost management. And the last one is enhanced profitability. Company should focus on optimizing operational efficiency by optimizing and controlling costs to improve future performance.
Hi, my name is Siti Nur Amira binti Azman. My metric number is D2023110793. And the last one, what should organization do next? Recommend for return on equity, Lotus should increasing profitability, reducing expenses, optimizing its capital structure. And Aeon pula should continue to focus on maintaining or improving its ROE because Aeon ROE dah higher dah. For asset test ratio, Lotus should investing in opportunities for growth, paying down debt, or returning capital to shareholder through dividend or share buyback. Next, for Aeon should increasing cash reserve, reducing short-term liabilities, negotiate better payment terms with supplier, or securing a revolving line of credit. And the last one, operating profit margin. Lotus should cost-cutting measure, process optimization, and strategic initiative to enhance revenue stream. Then Aeon pula should ongoing effort to control costs, innovate processes, and ensure that operational efficiency remain priority.
So that's all from us. Thank you for listening.